Good morning, everyone. It is Friday, December 10th. And this is Morning Market Movers, where we do live analysis for day trading and look at hot spots in the markets for the day. I'm Todd Rich with Nadex. With me from Keep Trading Simple, Brian Caprice. And there is a lot going on this morning. We just had the CPI number come out. Inflation, the highest it's been in decades. The inflation rate increase, we haven't seen an increase like this since the early 80s. Uh, we're seeing some price action. The commodities, we're really seeing some incredible price action this morning, whether it's oil, silver, gold, lots of volatility, things happening right now as we speak. And then we're also seeing the equity markets jumping higher this morning as well, all looking to open in the green. Before Brian and I jump into this today's session, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We're doing this for your education purposes. So, as I mentioned, we are going to go through these numbers where we had the inflation. I mean, everyone's been talking about they wanted to get a gauge and see what was going on in inflation. Uh, Numbers are high, and the inflation rate in November came in above expectations, expecting it to jump. It was the forecast was 0.7%. We actually came in at 0.8%. With that, we are seeing some volatility really in the commodities. That's really where you start seeing it. Here, I got a quick little picture of silver. We will go through this chart, but this is something we had actually spoken about yesterday. It was interesting because there was a big sell-off yesterday. We thought, hey, is this people just pushing this lower in anticipation for a trading opportunity tomorrow morning? And indeed, that's actually what happened. We'll also take a peek at gold and oil as well as the equities. Brian, I'm going to flip it over to you and let's
Sure.
start going through some of this.
Yeah, so the core CPI numbers came in exactly as expected, but the CPI month over month continued to rise, or not rise. It actually is a little bit lower. It was 0.9 last time. It was 0.8 this time, but the expectation was 0.7. Interesting enough, the markets actually moved exactly how we forecasted yesterday. We actually expected the numbers to come a little bit on the lower side, not negative, obviously, but a little bit less than expected, and we expected a spike in the market. We ended up getting the spike, and again, that's how we would have played it ahead of time because we don't know what the actual numbers are. Um, but I feel like it's really, really important because the strategy I taught you guys, I don't know, about a month ago now, the 35 and 1 strategy that we use for oil, you could have absolutely used it today. So I want to make sure that we cover it. As far as the overall currency market right now, because again, I would typically start with that. There's not really a whole lot moving right now. The pound yen is up about 56. We kind of talked about that. Everything else is rather flat. And it's a kind of mix of dollar weakness, dollar strength, but it's very, very weak dollar weakness. It's good some places, but then other places like the Aussie, not so good. Dollar CAD up just a little tiny bit. Euro pound, again, Euro pound is the only really 30, down 33 is about what it should do in a day. So not tons of movement, but CPI is going to be the hot topic today. We didn't really get much out of the ECB president. Todd mentioned silver was one of the things we're going to talk about. We talked about gold and silver. Could be great opportunities today, talking about a spike. And again, let me drop it down to a 5 minutes so you can get a little bit better read on it. But you can see what happened
Silver
was,
first.
huh?
You doing silver first?
Yeah, gold and silver first, but then I'm going to jump over
No,
and
no,
actually
that's
use
fine.
the
No, I
Nadex.
just wanted to know because I'm bringing up the silver chart too, and I'll jump to a 5 minute
Yeah,
chart
yeah.
as well.
So you can see, I mean, on a 30-minute basis, or this is a 5 minute chart. And again, for news, we talk about the 35 and 1. We're looking for levels of supply and demand. And then what we're doing is we're dropping it down to lower time frames, looking for some stabilization. Now, with silver, you're not really going to get the stabilization as much like oil because the market is not open. But you guys know what this pattern looks like. Whenever we see an up through a zone, we see the pullback, and then we see, we're looking for that burst. This is what we saw. We knew we had an area basing. How do we know? I mean, here's the basing. It kept, all the little wicks kept heading down again. Price at 7:45 started to move higher. 8:10, again, that 30-minute prior, price pulled back again right into a zone of buyers. So again, the way that we typically play these, particularly with the oil release, the 35 and 1, is looking for something a little bit farther out of the money. Todd, you want to show this one on Nadex real quick?
Yeah, here I'm actually going to drop this up and I just threw in that level of basing. These are the short
Mm-hmm.
duration binary options. I mean, you can see we were at strike. You know what? I'm going to even put in the strikes. Let's show the strikes so you can see them. Boom, right there. You could see we were right at this at this 2187 strike, and we had 4 strikes above it. Um, and then I'll go ahead and I'll let you. You want to talk through how that actually played
Yeah.
out?
Well, yeah, we have it on like 5 different charts today. But again, it just goes back to show you that again, it doesn't really necessarily matter what the news is. It's you're looking for technical formations, and that's what we saw today. Right now that it's already spiked up again, a lot of people are going to look at this and be like, "Oh, wait a second, we need to go long." So you're going to see probably some price moves back and forth again, and really kind of how silver weighs it out today. Technically, this should be data that's very very good for the dollar, but we saw the dollar spiking down from it as well. So I would say at this point, kind of watch a stabilization, but I would expect silver to kind of maintain and maybe roll back a little bit, but it's right around that 22. It's 2204 right now, 2205. So I expect that that's going to be somewhat more of an equilibrium point right now for silver. Gold,
Oh,
if you want to
here,
switch
hang
over,
on one
gold.
second. Just on the silver, and we are just so you know that 22 level from the sell-off from yesterday. That is the 50% retracement level on the fibs. And the other thing, what Brian was talking about, and I kind of want to point this out just so you understand what we were saying, so that when these events come up next time, right before the number came out, excuse me, right before the number came out, these out of the money binary options were not that expensive. The probability numbers on these were lower. And remember, you don't have to hold these until expiration to see what happens. Right before that number, these were cheaper. You could have. There was an opportunity here to more than double or at least double your money. In fact, when it punched above this level, these probably were trading slightly above 50. So yeah, had you had the opportunity to buy one of these out of the money binaries for 20 and sell it back at 50, it's a pretty decent return in just a couple of minutes. So there is these opportunities in binary options with the shorter durations right around event announcements. So that's what I think Brian wanted to kind of go through there is when he's talking about those out of the monies, looking for those. And you don't have to be totally right. You could be partially right and still find an opportunity to potentially profit while limiting your risk. I mean, there was only $20 worth of risk. All right, so sorry, I'm going to flip that back over to you. I don't know if you
Mhm.
want to go through gold and
I'm
oil
actually going to
quickly.
switch over to equities.
Oh, you're going
Yeah.
to go to
So,
equities. We'll come back to the commodities afterwards. Okay, that's fair.
well, I mean, gold is basically the same chart. I mean, gold is the one that actually came back up to its 50. It was a level that we had marked off yesterday. It was the last time we had a spike yesterday at 9 a.m. Same exact spot. We literally just came up. So, you know, the interesting thing about gold is yesterday we were preaching about 1770 as being the area where, again, it was going to have a hard time going through. There was a lot of buyers. And it did. It hit it, and it came back up, and then hit it again. And you guys see this slow rotation down here. Again, nothing super exciting, but that 4 o'clock, 3 o'clock window, here was the European session, and they were trying to prepare themselves for it. And there's the European session. So we knew that they were already starting to kind of push it down here, and again, continue it across. You can see nice push up, and really it went right from a buying area, even with the news, and came all the way back up again. And then again, your target on the other side should have been your 50% level right here. So right at 1782. And that's literally what we just banked off of. It's just shy of the 61.8 inside of fibs as far as gold goes. So really in gold right now, I'd probably look for more of a reversal, kind of push back down again. It may be a little bit late again. This was a pre-news move today. And again, that's what you should have been doing. And here's the dollar, and you're seeing the dollar kind of rally back up again from the same level. And again, I would expect there to be more of a strong dollar today
Look at that whip.
from weaker news out of China. So I'm going to go over to equities now because I think equities are, seeing inflation higher than expected. We all know that it's there. Consumer sentiment also supposed to be good. Every time we get a green number in CPI, it's even more reason why they need to cut taper and speed everything up faster because it just means that inflation is getting higher and higher and higher and higher and higher and higher. And it's going to continue to run away until they do something about it. Again, not necessarily the best scenario for the holidays and purchasing things because we're purchasing less. CPI being at a 30-year high, also, again, the government keeps passing these, or not keeps, but they've started to pass the infrastructure bills. Well, guess what? If we're paying the highest level of inflation that we have in 30 years, all those infrastructure bills, we're going to get a whole lot less than what they had originally proposed it. Because again, they're using data, these are the construction costs of the proposals, but those are from like a year or 2 years ago.
Man,
We're at 30-year high. So
right.
we're getting a whole lot less for our buck. So that infrastructure, even though it's less, again, also not like the best thing for everybody, right? So they really need to start capping this and kind of crushing this down again. So technically, we should see all the indices kind of turn and roll because it's good data, but it's good for the dollar, not so good for raising interest rates. And again, a lot of it was baked in, I believe. But overall, it's kind of one of those days where it's like, hey, let's get our profit and let's roll. So I'm going to actually use Nadex and talk about how you could have used the 3, 5, and 1 for the same scenario. And again, remember, yesterday we were talking about if this is coming in weaker, and that's kind of how I felt like it was going to be weaker, we were going to see a pop in all the indices. Well, Todd talked about, let's go over, it's not good enough commodities. Let's go to indexes. Let's go here. Just click any of them. There's the S&P. So you love silver. Well, guess what? Here's that same pullback. At 8:15, it pulled back. And then right at 8:25, this little green candle right here. Again, there's your saying. I can't draw as well over here, but level of basing, there was a pop. It's tested. It's already punched off of it again. And what did it do? Right hand. And again, just using this one right here is the out of the money. If you guys can see it over on the right hand side. And I guess I can do show strikes. Can you see it on there? There you go. So that's where we're at. Price pulled back. 1, 2, 3, 4, 5, 6, 7, 8. 8 strike prices in 10 minutes. Actually, 15, I guess. I'm not going to. That last little one, we needed it there. So in 15 minutes, 8 strike prices it blew through. So as Todd mentioned, the way that I like to play these with news, and again, this is the 35 and 1 strategy. I'm on a 5-minute candle a 5-minute chart right now. And again, the ones aren't going to help as much because it's pre-market, right? We need kind of market action for that one. We saw price pull back right before the news came out. Typically is a telltale sign of what it's going to do. The news technically should have driven it straight down, and I do believe there's a parabolic retracement trade. I do believe we come back down at this point. But the way you guys should have traded this one is when you saw this coming back down again, got something a little bit farther out of the money, typically 3 to 4 and sometimes even 5, you can get risk levels down into $15, $20. Okay. I mean, this one 8, so you could have absolutely gotten this one much cheaper. You can see right now, the at the money right now would be at 47.02. Unfortunately, we don't have that many above, but you can see, even right now, and this is only, this is kind of the at the money. So 1, 2, 4 of them, 4 above is $21 risk. So had it been 5, and again, expecting a big move for something like CPI, you guys could have got less than $20 risk on that one. When it came up, when it blew through, the at the money is always about $50. Risking sub 20, taking it off of 50. And imagine if you were able to get this one right here, right? The 46.96. It went 3 strike prices above that one. Could you have actually sold that one for a little bit more than $50?
Well, it's currently trading more than $50. Currently trading right around 60.
Yeah, so you absolutely could have got more than that. Again, on the spike and just think it's already pulled back. So
right.
Yeah, so it's kind of one of those things, guys, that there are so many ways to do this. You just got to know kind of, what your risks are. And yes, you're taking low risk. Is there a little bit of a gamble in it? Sure, there absolutely is, because nobody at the end of the day knows what's going to happen. But we do know on a technical basis when prices pull back, everybody tells you to do what? Buy on the pullback, right? There's your pullback prior to news into a level of buyers. Had there been no news, we would have done the same thing. It was still a buying area. But this is how you take advantage of Nadex, particularly around news events. Okay, people are like, out of the money. No, I want to be right 100% of the time. Great, risk all that money and then be wrong versus risking a little tiny bit of money. And if you do want to risk that much, guess what? Trade 3 or 4 or 5 positions, because to get into an out of the money up here when price is down here, it would be the same as 1 contract down here. You see the difference? 1 contract, the most you can make is 50. If you spend, 5 contracts over here, now instead of making just doubling your money or tripling your money, if it closes above, which by the way has 1 hour to go, if it closes above, your $20 worth of risk pays out $80 per contract. But now times that by 5,
right,
10, whatever it is, you're at $400 instead of your 1 contract down here, $50 risk. So $50 risk 1 contract, $50 risk up here is 3, 4, 5 contracts because it's a little bit farther out of the money. That's how you really get ahead. And again, going back to kind of news, and sorry, it's a little bit of teaching today. CPI is a high impact.
I think it's important. It's important to be able to share what the thought process is as well.
But high impact news release. This is why we focus on it. And again, daily facts. I can look next week and look at all the high impact news releases. Are they all going to be huge movers? No, but CPI for Canada, yeah, it could be. Core retail sales, yeah, that's a big drop. We're going to talk about that. FOMC next week. Is that going to be a big mover?
Yeah,
Yeah,
that is going
absolutely.
to be and by the way, we try to tell you every morning when we come on, we're telling you what's coming up, and what's one
Yep.
of the reasons why you like to join in the morning is that we can tell you, "Hey,
Yep.
by the way, this week," and we've been telling you, we started telling you, earlier this week, CPI on Friday, get ready for it. And when there's these big events like this, it's there's these opportunities where you can potentially capitalize because it will create that
Hmm.
trading opportunity. Are
And
you
again,
always going to be right? Not necessarily, but it does create that opportunity
yeah,
versus other
and it
times it
doesn't
doesn't.
matter which one. That was ES. This is NQ. NQ did the same
Same chart.
exact thing. Dow, click it over here, same exact thing, right? So they all basically did the same thing overall. And again, we're seeing the dollar kind of stabilize itself. But at this point, with everything up pretty big, you're going to see a lot of people coming into these trades right now and be like, "Hey, listen, the market is up big, but it's up big. What? If you look to the left, we have some areas of sellers in the ES. In Q, we got a little bit more room to run until we hit some people, some sellers. YM, we also know that we got another psychological level sitting right up here at 35,900. Question is the top put in now, right? Everybody sees this big up. It's like, yeah, the market's going up today. We just had that huge spike. Technically, CPI being higher is not good for the market. It's good for
No.
the VIX because, again, the VIX knows that, all right, listen, the uncertainty is off the table. Let's drop it back down again. But at the same time, you know, dollar index rallying down again. Russell already started. They all look the same, right? Big spike. Now we're pausing here. And again, the question is, does all the retail traders start to hit buy when this trend takes a reversal and pushes back down again? Apple, popped a little bit, and again, it's a little bit up, but it looks like it's going to be a little bit red. And same thing, Tesla, nice spike, but it's hitting an area of sellers. So a lot of things are hitting areas of sellers right now on this big spike. You know, Again, parabolic retracement trades require news, a larger than normal move up, which again, we absolutely have that. And
But
now
then
we're
we got to
hitting
see what
areas of
happens.
sellers.
Yep.
Yeah. And, on a 15-minute, you can see that there is a level right there that's been tested that we just bounced off of. So could be, I'd love to say that it's going to definitely be a green day today. But, one of the things that has been a dragger on the market has been Omicron. I did see news this morning that Pfizer, or I guess the FDA approved, because Omicron is a big threat, which not a lot of people believe it's a big threat, but it's like one day it's not, the next day it is. They
Yeah.
approved booster shots for that the younger age group because Omicron is a threat. But every day it's one thing: Omicron's good, Omicron bad, Omicron who,
Yeah.
Omicron what. So don't know. But what
Yeah.
I'm saying is, on a technical basis, large spikes up into areas of sellers. I'm typically looking for a reversion back to the mean. So,
All right.
although everything looks great now, maybe some reversals later.
Yeah. Well, and we'll see what Friday has to hold for us. Um, with that, any questions for Nadex, please email us, customer service at nadex.com. You can also email Brian if you wanted clarity on any of that or you got some questions. Please email Brian, support at keeptradingsimple.com. Today, it was really all about CPI. Even though the Fed's preferred measurement of inflation is PCE, personal consumption expenditures, which we will eventually get. CPI, certainly something that everyone has historically looked at, and it's high. It's the highest increase we've seen in nearly 4 decades. We're seeing action in the commodities, gold, silver, oil, and equities reacting a bit to it as well. Hope everyone has a happy Friday. Brian and I will be back on Monday morning. With that, want to wish everyone good luck in the markets. Thanks for joining, everyone.